Yeah, we'll begin with advanced accounting, the chapter number 1. Or before we start with the core content, accounting standard, there are certain things which we have to understand, then we proceed with. Okay. Maybe you could have seen in your BCom or plus 1 and plus 2, we prepare a trading P&L account. We prepare a trading P&L account. What is the purpose of preparing the trading P&L account? To find out financial results. We call it as which one? Profit or loss. And we prepare the balance sheet. What is the purpose of preparing the balance sheet? To know the financial position. Simple. We want to know what are the assets and liabilities as on a particular date. Assets and liabilities as on a particular date. The balance sheet is prepared to know what? Statement of which one? Assets and liabilities as on a particular date. This we do it for a sole trader. What do you mean by sole trader? A single owner. You are the single owner. Okay, you are the ultimate owner of the, business. We prepare trading P&L account and balance sheet. For a partners also we can prepare what? Trading P&L account and balance sheet. For a society, for a trust, we can prepare trading P&L account and a balance sheet. Wait, who will access the accounts? Yaar on the accounts access பண்ணுவா? Who will access the accounts? Sole trader. Let us assume you are the individual owner of the business. Who can access the accounts? Can I come and access your trading P&L account and balance sheet? No, why? I don't have any right. I may be a creditor, I may be a customer, or I may be a third party. Can I access your accounts? உங்களோட accounts நான் access பண்ண முடியுமா? I cannot access your accounts. Clear? Third party cannot access the accounts. What about partnership form? Who will access the accounts? Partners only will access accounts. Can a third person access accounts? No. In case of a society or a trust, etc., the trustees and people, contributories, etc., will access what? Accounts. Okay. But imagine if it is a company. Imagine if it is a company. Who can access the accounts of a company? You are all shareholders, you can access the accounts. I am not a shareholder. Can I access the accounts? Yes, I can access the accounts. Number one. Can a person, like a student, can they download company's P&L account, balance sheet and access? Yes, any company's P&L account and balance sheet. If it is a company, you can download the information and what? Access. Clear? For example, every company gives the data on the website itself. You go to Reliance Industry or Wipro, you need not be a shareholder, you need not be an employee. Anybody can download P&L account, balance sheet and access. Clear? Employees can access, customers can access, suppliers can access, who else can access? Investors can access, students can access, researchers can access. Anybody who wants, they can access the accounts. So for a company, the trading P&L account, okay, we call it as income statement. We call it as which one? Income statement and which one? Balance sheet. Is it a private document or a public document? Public document. Anything that is accessible to public, we call it as which one? Public document. When there is a public document, it must be written in a uniform way. It must be written in a uniform way. What do you mean by uniform way? For example, for a sole trader, is there any order in which you would write your assets and liability? Is order you would write your assets and liability? No. Can you start with capital first, or creditors first, or liabilities first, like loans, etc.? Any order you can write your liability. Is there any order in which you would write your assets? Any order you can write your assets. Can I start with cash in hand, go to debtors, inventory, missions, or can I start with missions and go other way? Yes, there is no format. There is no format. Why? Because you only access the accounts. You are only going to access the accounts. Can a third party access the accounts? No, third party cannot access the accounts. But when it comes to a company, public is accessing the accounts. It must be written in a uniform way. Sir, what do you mean by uniform way? For example, if there is no format given, you will call them as debtors. You will call them as which one? Debtors account balances. Same thing in my book, I will call it as customers account balances. Okay. In other company, they may call it as trade receivables. Trade receivables. In another company, they may call it as accounts receivable. Okay. What do you mean by these things? Are they different or they communicate the same meaning? Same meaning. Debtors are nothing but our customers who has to pay the money. They are nothing but what? Trade receivables. They are nothing but accounts receivable. They are nothing but what? Accounts receivable. All communicate the same meaning. But let us assume A Limited in balance sheet they have shown like this. B Limited in balance sheet they have shown like this. C Limited they have written as trade receivable. and D Limited balance sheet, they show it as which one? Accounts receivable. Each company write their own name. Their own name. Okay. Now let us assume I'm not a commerce man. I'm not a commerce man. Okay. The general public are not having commerce knowledge. Clear? Only about 4 or 5% of people will have what? Commerce knowledge. Clear? A common man reading the accounts. ஒரு கம்பெனில டேட்டாஸ் இருக்கு, இன்னொரு கம்பெனில கஸ்டமர்ஸ், இன்னொரு கம்பெனில ட்ரேட் ரிசீவபிள், another company accounts receivable. I get confused. What is the difference? What is the difference? I get confused earlier. Okay, now all the company should prepare the balance sheet in a uniform format. Now the company law says remove all the names. Remove which one? All the names. Your customer should be called as which one? Trade receivables. So A Limited, B Limited, C Limited, D Limited, all the company will use one single name. What is the name? Trade receivable. I can compare. Okay, company A with B with C with D, I can compare. What is the volume of credit sales? What is the amount to be collected? I can compare. Same way, we used to call it as fixed assets. Earlier we used to call it as which one? Fixed assets, which can be classified into tangible assets and intangible assets. Now, some people don't use the word fixed assets. They call it as non-current assets. What is it called as? Non-current assets. Some companies, some people may not use the title at all. They'll call it as plant and machinery, land and building, freehold premises, leasehold premises, like that they will use the name. So when use different name, again people get confused. Now simple, the company law says, or company law says, don't use the word fixed asset, tangible, intangible and all. Call them as which one? Non-current assets. Everybody will use the word what? Non-current asset. That will be classified into tangible, intangible. Simple. When a balance sheet is prepared in a uniform way, it is easy for us to compare. It is easy for us to compare. What do you want to compare? To make investment. Clear? Whether to invest in A Limited or B Limited or C Limited, which company is better to invest? Whether to hold or sell the shares. How do I decide? By looking at balance sheet, P&L account and all. When all the companies are giving in a uniform way, it is easy for us. It is easy for us. Wait, maybe I'll go a little bit extra. What is the name of the capital of a company? In case of partnership, we call it as which one? Partners capital. In case of a company, we use the word share capital. We use the word share capital. Share will have a face value. Share will have a face value that you will record as share capital. Okay. In India, we use the word equity shares. Shares held by members of the company. Preference shares. What do you mean by preference shares? They get dividend at a fixed rate, repayment of capital also. Clear? Who are equity shareholders? Ultimate owners who take risk. Who are preference shareholders? They don't take any risk. They will get every year a dividend and they will get repayment of capital also when the company is closed. In India, we use the word. But in US, they don't use the word shares. They call it as common stock. Common stock means equity shares. They call it as preferred stock. India, what do you mean by stock? Inventory, closing stock, opening stock. But US lo poi stock nu sonna, they will ask, is it common stock or equity stock? In US, they don't use the word stock at all. Stock is used only for which one? Shares. Then, how do they call the stock? The raw material, the work in progress, finished goods, they don't call it as stock. They call it as which one? Inventory. But Indian balance sheet, we'll call it as closing stock. We'll call it as which one? Closing stock. Let us assume an international investor. What do you mean by international investor? A person sitting in Australia compares Indian company with a US company. Indian company balance sheet, we written equity shares and preference shares. US company, they've written which one? Common stock, preferred stock. But Indian company or balance sheet, we've written closing stock in the asset side. There is no such item in the US balance sheet. They call it as which one? Inventory. Look at that person. Will he be able to compare an Indian company with foreign company? No. For example, in India, when you issue the shares for more than face value share issue panna, in India we call it as which one? Share premium or securities premium. We call it as which premium? Securities premium. US they don't use such word. They call it as APIC. Additional paid in capital. They call it as which one? Additional paid in capital. India balance sheet you will find securities premium. US balance sheet you will find which one? Additional paid in capital. Though we have completed our BCom, now only we come to know Share premium is nothing but what? Additional paid in capital. Look at a common man who's not having any knowledge about accounts. They will get confused. They will get which one? Confused. Now, Indian company accounts should be comparable with foreign company accounts. Why? You should present our Indian company accounts in such a way that you're able to compare with a foreign company. Why? Because we want foreign direct investment. We want which one? Foreign direct investment. Why do you want foreign direct investment? For development of the country. We want foreign exchange or we have surplus foreign exchange? We want foreign exchange. Always our imports are more than what? Exports. We want foreign exchange. For that, we have to write our accounts in international language. In international language means an Indian company account should be compared with which one? A foreign company accounts also. How to make it comparable? There are different methods. Which we will compare it later. So, balance sheet, are we going to prepare in our own style or are we going to prepare as per the format? As per the format, it is given in Schedule 3 of Companies Act. 2013 Companies Act has given the format of balance sheet. Learning the format matters a lot for reading further in accounts. Pay attention because your accounting in new syllabus has moved from traditional accounting to reporting based accounting. Traditional accounting to reporting based accounting. We should know what to report it. The first side is no more called as liability side, it is called as equity and liabilities. It is called as which one? Equity and liabilities. That is divided into, first one we call it as, don't copy it, I'll give you time to copy. Shareholders funds. What is it? Shareholders funds. Don't copy it, I'll write the subheadings later. Second one we call it as application money, pending allotment. And third one is a non-current liability. What is it? Non-current liabilities. And fourth one is current liabilities. These are the four subdivisions of liability side. These are the four subdivisions in which side? Liability side. What is the first one? Shareholders fund. Second, application money pending allotment. Third one is which one? Non-current liability. And which one? Current liability. Now under shareholders funds, it is further classified into share capital. Which one? Share capital. B, reserves and surplus. I'll explain every bit of it because everything can be tested in exam. They will ask you to prepare working notes for share capital alone. Reserves and surplus alone on the mark. Reserves and surplus. Then third one we call it as money received against share warrants. Okay, so shareholders funds. Shareholders funds has three classifications. One is share capital. Second is which one? Reserves and surplus. Money received against share warrant. Point number 2 is self-explanatory. Application money which are yet to be allotted. What is the third one? Non-current liability. We have got some different headings. One is called as long-term borrowings. Long-term money borrowed in long-term. B, deferred tax liabilities. Deferred tax liabilities. We have got a separate accounting standard for it. We will learn. Next one, long-term provisions. Long-term provisions. Provisions created for long-term. Then another one is other non-current liability. Other non-current liability, like that, 4 headings are there. Each heading I'll explain. Each heading can be tested separately in the exam. This will come under short-term borrowings. Current liabilities are payable in short term. It will be called as which one? Short-term borrowings will come. Then we call it as, we don't call it as creditors. We call it as which one? Trade payables. C. Short-term provisions. Short-term provisions. Then other current liabilities. Other current liabilities. If any, we'll record it. So if you look at liability side has 4 major headings. What are the 4 major headings? Shareholders funds. Okay, application money pending allotment, non-current liability, and which one? Current liability, like that. This is liability side. This is which side? Liability side. Every company must follow this format. Let it be Bharadwaj Institute Private Limited or Infosys Limited or Reliance Industries Limited. Everybody must follow what? This format only. Assets only two classifications. Assets are only two classification. First one we call it as non-current assets. Non-current assets classified into different category. Non-current assets are classified into we call it as plant, property, and equipment, which will be nothing but what? We have to classify them into tangible assets, B, intangible assets. Tangible assets means land, building, plant, machinery and the mari. Intangible asset na patent, goodwill and the mari. Then capital work in progress. Capital building under construction. Before the completion of construction, it is called as what? Capital work in progress. Then intangible assets. Intangible assets under development. For example, we applied for patent right, we are yet to get the patent right. We applied for copyright, we are yet to allot the copyright, get the copyright. That is called as which one? Intangible assets under development. We'll explain every point. I'll explain every point. So how the plant, property, equipment is classified? Tangible, intangible, capital work in progress, intangible assets under development in the market. It will have long-term investments, long-term investments. Then it will have long-term loans and advances, loans and advances. It will have loans and advances. It will have deferred tax assets. It will have which one? Deferred tax assets. Then any others. Clear? So how many headings under this? Plant, property, equipment should be classified under 4 heads. Thereafter, long-term investments, long-term loans and advances, deferred tax assets and what? Others. The next classification is current assets. Non-current asset and which one? Current assets. Current assets will have current investments. Wait, pannunga. If investment is held for maturity, 5 years, 4 years, it will be called as what? Non-current asset. If investment is held for trading, whenever there is a good profit available, I will sell it. It is called as short-term investment, otherwise known as what? Current investments. Trade receivables. Nothing but debtors, bills receivable, all those things. Then it will have inventory. What do you mean by inventory? Stock, closing stock. It will have cash and cash equivalents. What do you mean by cash? Cash balance. What do you mean by cash equivalent? Equal to cash. Bank balance. Customer check received but not deposited. It is equal to cash. It is equal to what? Cash. For example, on 31st March, one student came and paid the fees by DD. On 31st March, one student came with a DD and paid the fees. Okay, the DD we are yet to deposit. The DD, draft in hand is equal to what? Cash. Deposit panna cash, we will get it on the market. Then it will have short-term loans and advances. Short-term loans and advances. Then any other current asset. Other current assets. Simple. Any balance sheet must be written in this format only. Clear? Liability, how many headings are there? 4 major headings. Sub-headings are also there. Assets, 2 major headings. Non-current assets and which one? Current assets. Can you change the order? No. Can I change the order? No. It must be presented only in this particular format. Okay. This is a format applicable to what? A company. This is a format applicable to a company. Now what I request is first take up the format of balance sheet and always current year amount should be represented with what? Previous year amount. So it will have 2 columns. Examination point of view, it will have only 1 column. Examination point of view, it will have only 1 column. But practical reporting side, it will have what? 2 columns. Always current balance sheet will be represented along with which one? Previous year item like that. So this is the order of preparing which one? Balance sheet. Start. Format of balance sheet as per Schedule 3 of Companies Act. And wherever there is a working, you have to give the working notes. I'll give explanation for everything. I'll give explanation for every item given in the balance sheet, but I request you to take up the main format now. This format is important for learning 4 chapters. 5 chapters. Okay, final accounts of a company we are going to learn. Amalgamation, absorption, like that we are going to learn. At the time you have to prepare balance sheet after amalgamation. Holding company accounts. Holding company should prepare what? Balance sheet in this format. So this learning this format is primary for learning all the other chapters. So public company or private company, listed company or unlisted company must follow this format. Can mark it as 1, 2, 3, 4. We'll give the explanatory note for this. And remember, in the examination, you will be given only ruled sheets. Okay, let it be accounts paper or costing or law paper, you will be given only what? Ruled sheets. That's why we are practicing in the class also in ruled sheets. Shall we? Have we taken up non-current assets? Current assets? See what we are going to see. We are going to see about 26 explanations. Every explanation is important for multiple choice question or for solving a lengthy problem. Okay. In a lengthy problem, you have to we will be able to classify between what? Current investment and which one? Long-term investment. Trade receivables, of course, what should be written as inventory? Okay. Maybe I'll ask you some questions. Where will you show plant and machinery? Plant and machinery, plant, property, equipment, tangible, auto. Where will you show land and building? Tangible. Where will you show leasehold premises? Leasehold assets. That will also come under what? Tangible assets. What about loose tools? Will it be coming as fixed asset or current asset? Like this, we'll have a doubt. What about consumable stores? Loose tools, fixed asset, current asset? Doubt. Second, whether consumable stores, are they fixed assets or current assets? Current assets. What about loose tools? Okay, we'll have a doubt. We'll have a doubt. So once we understand what will come, where it will come, then we'll be very, very clear. Okay, for example, outstanding salary, outstanding rent, where it will come? Outstanding rent is a liability or asset? Payable is a liability. Where it will come? Current liability. Heading lower. Will it be shown as short-term provisions or other current liabilities? It will be shown as which one? Other current liability. It will be shown as which one? Other current liability. So we'll have a confusion in where to write, okay, where to classify all those things. When we understand all these 26 items in depth, then we'll not make a mistake. We'll not make a mistake. Have we taken up the format? Over. Start. We'll start to explain which one? Start. Start with schedule 1. I request you to start with working note number 1 or explanation 1 for share capital. Pay attention. Every company will have an authorized capital. Please listen to it, then you can copy. What is authorized capital? Maximum capital. The company with which the company is registered. It is also called as which capital? Registered capital. It is also called as nominal capital. This will be there in your memorandum of association. Company's memorandum of association, you check, it will have which capital? Authorized capital. What is the thing we learned? Authorized capital. It will be there in which one? Memorandum of association. Company order document la irukum. Authorized capital. Wait pannunga. Issued capital. Issued capital is nothing but face value of shares to be issued to public or issued to public. Issued to public for subscription. For example, a company has about 1 crore authorized capital. Issued capital may be 50 lakhs or 60 lakhs or 70 lakhs. Issued capital, but it cannot be more than which capital? Authorized capital. Then you should mention called up capital also. Called up capital is nothing but amount called on the shares. Amount called on the shares issued. Shares subscribed. Pay attention, pay attention. Let us assume, I'll go with an example so that you will understand better. A company is registered with 1 crore shares of 100 rupees each. So what is authorized capital? 100 crores. Authorized capital is how much? 100 crores. Let us assume the company has issued about 50 lakh shares of rupees 100 each. What is the issued capital? 50 crores is the issued capital. Let us assume public subscribed for 90%. Without 90%, you cannot allot. Public subscribed for, let us assume 90%. That is called as which capital? Subscribed capital. Face value of shares purchased. Let us assume public subscribed for 45 lakh shares, 100 rupees you have to pay. How much it will be? 45 crores. What is the face value per share? 100 rupees. In the 100 rupees, we called up only 50 rupees. We asked the shareholder to pay only 50 as of now. That is called as which capital? Called up capital. 45 lakhs into rupees, how much? 50. That will be called as which capital? 22.5 crores will be called as which capital? Called up capital. Once again, Authorized capital is the maximum capital. Issued capital is nothing but what? The value of shares issued to the public. Subscribed capital is nothing but the amount of shares purchased by the public. How much is asked by the company? That is called as which capital? Called up capital. In that, some calls and arrears can be there. What do you mean by calls and arrears? We have called money, but some shareholders have not paid the money. We have called the money, but some shareholders have not paid the money. Let us assume some shareholders have not paid 50 lakhs. That is 0.5 crores they have not paid. The difference will be called as which capital? Paid up capital. Paid up capital எவ்வளவு crores இருக்கும்? 22 crores. Paid up capital is how much? 22 crores. Wait பண்ணுங்க. Paid up capital is what is going to be recorded in balance sheet. Balance sheet la what will be recorded? Paid up capital only will be recorded in balance sheet. Here, share capital represents which capital? Paid up capital. Then why are you showing other things? Why are you showing other things? It is mandatory as per company law to show all these information. Which information? Authorized capital, issued capital, subscribed capital, called up capital minus calls in arrear. Everything must be shown as a notes to accounts. As which one? There will be a balance sheet. In that notes to accounts number 1, it will have all these information. It will have what? All these information. Wait பண்ணுங்க. Can all these amounts be equal? It can be. Let's just see my company has an authorized capital of 1 crore shares of 100 each. All issued, all subscribed, all called up, all paid up. Now, what will be equal? Authorized will be equal to issued will be equal to subscribed will be equal to called up will be equal to paid up capital. But paid up capital can be never more than which capital? Authorized capital. Not only this, you have to give notes to accounts. Notes to accounts. You have to give shares allotted to promoters, if any. Shares allotted to promoters, if any. Shares allotted for non-cash consideration, like purchase of assets. We would have purchased assets and allotted shares. Other details are no. Bonus issue, okay, or purchase of business. For example, A Limited would have taken over the business of B Limited. Limited would have taken over the business of B Limited. At the time, they would have allotted shares. So that information you have to give. Then you have to give information about preferential allotment, if any. What do you mean by preferential allotment of shares? For example, a company is issuing shares. All of us are applying for the share. The company is issuing shares. All of us are applying for the share. One big investor is applying for the share. Now what the company will do? The company will allot to us first or to the big investor. Why? Managing 50 people is difficult, but managing one person is easy. Instead of collecting 1 crore from 50 people, what the company can do? From one person you can collect what? 50 crore and close the issue. That is called as preferential allotment of shares. That is called as which one? Preferential allotment. Priority preferential allotment of shares, if any. Then details about share forfeiture, reissue. That cancel பண்ணிருக்கீங்களா, reissue பண்ணிருக்கீங்களா அந்த மாதிரி. Then information about any wrong allotment done. Information about what? Any wrong allotment done. Other data, other necessary details should be given. Other necessary details like promoters contribution evlo. What do you mean by promoters contribution? Who started the company? How much they contributed? How much they contributed? You take Reliance Industries Limited. Who are the promoters? The family of Ambani. The family of Ambani. How many shares they hold? That will not be there in the balance sheet. The share capital the balance sheet la irukum. You have to see the notes to accounts. You have to see which one? Notes to accounts. If you look at the notes to accounts, promoters contribution 40%, which means the people who started the company or the group is holding how much percentage? 40%. Now remaining 60% is held by what? Outsiders. Then you have to give details about Indian versus foreign investors details. Okay. You have to give individual versus institutional investors. What do you mean by individual versus institutional investors? Individual means you and me holding shares in a company. What do you mean by institutional investors? LIC purchases shares of, let us assume, Reliance Industry. Will be called as individual investor or institutional investor? And that detail should be given. If I purchase shares of Reliance, individual investor, that detail should be given. So share capital, all these information, will it come in balance sheet or as notes to accounts? Notes to accounts, but balance sheet, paid up capital you will show. And please remember, dividend will be paid or will be calculated as a percentage of dash. Dividend, either percentage will work out. Will you work out as a percentage of net profit, issued capital, okay, subscribed capital, called up capital. They will give you options, multiple choice question. Will it be worked out as a percentage of net profit or as a percentage of which one? Issued capital or as a percentage of which capital? Subscribed capital or as a percentage of which capital? Called up capital. When a company is paying dividend to shareholders, on which amount you will apply that percentage? Net profit, huh? Okay, that's what every work is important. It will be calculated as a percentage of, they make it, the answer is none of this. Answer is E, paid up capital. Dividend will be calculated as a percentage of which capital? Paid up capital. Okay. Paid up capital 22 crores now. If dividend is 10%, 22 crores into how much percentage you will pay? 10%. They can ask a theory question or they can ask which one? MCQ, like for example, they will give you paid up capital, called up capital, authorized capital, net profit, dividend 10%. So you have to apply that percentage as a percentage of which one? Paid up capital, as a percentage of paid up capital. This is important for multiple choice question purpose. We have to learn for knowledge point of view as well as examination point of view. And one more thing, there is something called as notes to accounts. You have to give details about reserve capital. What is it? Reserve capital. It is not capital reserve. Please understand, it is not capital reserve. It is which one? Reserve capital. What is a reserve capital? It is not part of all these things. It is not part of all these things. Reserve capital, the capital reserved, which can be called only at the time of winding up of the company or liquidation of the company. If funds are insufficient to pay liabilities, that is called as which capital? Reserve capital. For example, pay attention. The company is closed today. A company is closed today. The company has, let us assume, 500 crores assets. How much you can get? 500 crores assets. If you pay liability, you have to pay 750 crores liability. Assets evlo varudhu? 500 crore. But you have to pay 750 crores liability. Na? There is a sufficient fund available or insufficient? Insufficient evlo irukku? 250 crore. At this time, suppose if reserve capital 50 crores available, na, what will you do? Collect the 50 crore and pay. Still there is insufficient, na, that's all. Lenders have to lose the money. Look at, you all gave the money 750 crore. Through selling assets, how much you got? 500 crore. By collecting money from reserve capital, how much you will get? 50 crores. And the balance 200 crores and upon you will lose money. Suppose if reserve capital is available for 300 crores, na, assets are sold for 500 crores. But liability, how much we have to pay? Extra 250 crores pay pannu. Shortage irukna. You will call 300 crores or 250 crores? 250 crores. I repeat. Assets are 500 crores realized. Liability 750 crores irukku. Using that money, you settle liability. Balance how much is there? 250 crore. Reserve capital how much is there? 300 crores. Now how much you will collect? 250 crore from the reserve capital. That's why the capital reserved, which can be called only at the time of what? Winding up of the company, funds are insufficient to pay which one? Liability. They can ask this also in MCQ. How they will test it? Fill in the blanks, Mari. The capital that can be called only at the time of winding up of the company. A, reserve capital. B, capital reserve. C, paid up capital. Uncalled capital and the Mari kudukkalam. Which one? Reserve capital. Okay, so take up this. All these are part of notes to accounts. So in the new syllabus, the way in which we learn accounts itself is totally different. I mean, we are moving away from that traditional method of journal, ledger, single entry, departmental accounts, and the mari move pannittu, we are going to the practical side of reporting. And please remember, if you become a CA, you have to sign the balance sheet. You have to check all the information and sign the balance sheet. Or if you become an article clerk also after completing intermediate, when you are sent for audit work, okay, in the balance sheet, you will check for all these things. Sometimes in the exam, they give this alone, or they may give this alone for 5 marks. They will give you detail, prepare schedule 1 share capital. So where only paid up capital will be taken for balance sheet, all the other things will be given as what? Notes to accounts. Notes to accounts are otherwise called as disclosures. Remember, disclosure I have given only 5, but practical side, there can be 20, 30 disclosures also. So dividend will be calculated as a percentage of which capital? Paid up capital. And the share capital will include both equity share capital as well as preference share capital. Those are running live online as well as those are accessing recording, or if you're accessing recording, try to use a laptop for accessing the recording, because in mobile, you will feel the font size is very, very low, or you'll find uncomfortable. You'll find uncomfortable in accessing like the 22 crores or 5 crore, very small R. So if you're accessing the recording, try to use laptop. It will give a better ambience or better atmosphere for learning. Copy painting. So please remember, paid up capital will be taken for balance sheet. All the others are given as disclosure. Reserve capital, the capital that can be called only at the time of which one? Winding up of the company, and dividend will be calculated as a percentage of the paid up capital. And this knowledge is also required in group 2 class. Auditing class, you will learn about audit of share capital. Audit of which one? Share capital. That includes share transfer audit, share transmission audit, and audit of share capital. Knowledge of this schedule will help you in learning auditing also. What is the next schedule? Reserves and surplus. Reserves and surplus, that is item number 2 in balance sheet. See, name any reserve maintained by the company. There can be a lot of reserves which can be maintained. Example of reserves are like general reserve. It can be a sinking fund. Sinking fund is for redeeming some debentures and bonds and the money. It can be like a investment fluctuation reserve. Okay, investment fluctuation reserve. Workmen compensation fund. Workmen compensation fund. It can be securities premium. What is securities premium? When you issue the shares more than the face value, it is called as what? Securities premium. Capital reserve. Capital reserve. We'll learn something called as capital redemption reserve. This is new concept for you. Other things you know. General reserve maintained for some contingency. Sinking fund is for redeeming debentures, etc. Investment to adjust the fluctuation in investments. Workman compensation fund to pay compensation for workmen if any. What is securities premium? Premium on issue of shares, more than the face value issue panna. Capital reserve can be created in some circumstances like cancellation of shares or for example, employee stock option plan. At that time we will see. What is the next one? Capital redemption reserve. We will learn in a chapter called as buyback of shares. We'll learn in a chapter called as buyback of shares. We'll learn when to create capital redemption reserve and the mari. This can be even some statutory reserve. What is statutory reserve? Required as per some law. Which law? It can be any law. It can be as per Income Tax Act, or it can be as per Workmen Compensation Act, Payment of Wages Act, Gratuity Act, and the mari. Any reserve, what do you mean by statute? Law. Statutory means as per law. As per law, when you create some reserve, that is called as which reserve? Statutory reserve. It can be a revaluation reserve. What do you mean by revaluation reserve? Revaluation of fixed assets. For example, land I purchased for 10 crore. Today the market value is 5 crore. It is a permanent appreciation. What will you do? 10 crore purchase cost about 5-6 years back. Today market value is 15 crore. What is the extra amount? That 5 crore. That 5 crore, will you take it as profit to P&L account? No. It will be called as which one? Revaluation. It will be transferred to which account? Revaluation reserve account. It is created out of revaluation of assets and the money. It can be any reserve. It can be even certain. We are going to learn accounting standard 12. Accounting standard 12 we will learn. There is something called as government grant account. Government grant account. For example, you are starting an industry in a backward area. You are starting an industry in a backward area. To start the industry, the government is giving subsidy. To start the industry, the government is giving. You contribute 10 lakhs, government will contribute 4 lakhs. You are getting that 4 lakhs, you are getting that 4 lakhs. That can be taken as what? A reserve. That can be taken as a reserve. Deferred government grant account, we will learn in accounting standard 12. So name any reserves. This also will include profit and loss account balance. Profit and loss account balance, if any. Okay. All these things are called as which one? Reserves and surplus. General reserve, all these workmen compensation fund, revaluation reserves, government grant account, P&L account balances. Many reserves are maintained. Dividend equalization fund. Dividend equalization fund. It can be any other reserve that is maintained by the company. Some companies maintain contingency reserve. Contingency reserve. So all these reserves are part of which one? Reserves and surplus. Okay. See, certain expenses spent by the company do not have any value. Certain expenses incurred by the company do not have any value, but that will not be charged immediately in the P&L account. Expenses are spent by the company, do not have any value. We don't charge it in the P&L account. Can you tell them? Expenses are spent by the company. They do not have any value in the future, but cannot be charged in P&L account immediately. Salary paid, number one. Already benefit is enjoyed, you will charge it in which account? P&L account. Rent paid, you will charge it in P&L account. What I'm telling, expenses are paid by the company, has no future benefit, but cannot be charged in P&L account immediately. Cash is an asset. Petty cash is an asset. Other expenses are treat பண்ணிடும். We'll take refreshments will be taken as expense. Maybe you would have heard about it. Preliminary expenses. To incorporate the company. Is it possible to just like that start the company? What do you have to do? You have to appoint a legal consultant. You have to pay the fees. Then to register the company, you have to pay the money. To prepare MOA, OA, you have to pay the legal consultant. To get the certificate of incorporation. Then get the certificate of commencement of business. All these things will come free of cost or you have to pay money. They are called as which expenses? Preliminary expenses. Preliminary expenses, 5 lakhs is spent. Wait, pardon. Because of the preliminary expenses, will there be a future benefit? No future benefit. It will not be charged in P&L account. Why? Because it benefits for a longer period. Preliminary expenses give short-run benefit or long-run benefit. Long-run benefit. Maybe in income tax you will be learning. Preliminary expense will be written off in 5 equal installments. How many installments? 5 equal installments. So 1, 5, 1, 5, 1, 5, 1, 5 like that you will write off. Let us assume current year you have got some preliminary expenses 5 crores. How much you will charge it in P&L account? 1 crore. What about the remaining? Old format, we used to show it as an asset. We used to show it as an asset. But as per the new format, they must be reduced from reserves and surplus. They are called as miscellaneous expenditures. Otherwise called as fictitious assets. Fictitious assets which are having no value. Which are having no value. That must be reduced. Example of these preliminary expenses. Preliminary expenses. Discount on issue. Discount on issue of debentures. Shares cannot be issued at discount, but debentures can be issued at discount. Okay, it can be in the form of maybe underwriting commission. For example, whenever a company is making a public issue, you'll appoint what? An underwriter. For the underwriter, you will pay what? Commission. That commission you will write off over a period of 3 or 4 years. It can be amalgamation expenses. You will learn in income tax. Expense in merger, amalgamation and all can be written off in 5 equal installments. Okay, so these things should be written off against reserves and surplus. These things cannot be shown as an asset. Cannot be shown as an asset. That must be reduced from which one? Reserves and surplus. So add up all the reserves and surplus, eliminate which one? Miscellaneous expenditures, otherwise called as which one? Fictitious asset. Now namesake those expenses are there. Future you cannot, that has no value. That has no value. It must be adjusted against what? Reserves and surplus. You will get net reserves and surplus for balance sheet. Take up this note. So add up all the general reserve, sinking fund, investment fluctuation fund. Add up all the workman compensation fund, securities premium, capital reserve. Ella reserve add பண்ணிட்டே இருங்க. Then add up, you can take it up. You can take capital redemption reserve, all statutory reserves you can add up. Any revaluation reserves you can add up. Any government grant account you can add up. Profit and loss account balance, if any, you can add up. Any other reserve maintained by the company, any other reserve that is maintained by the company, you can add up. Even contingency reserves you can add up. All these things you can add. All these things you can add minus what? Minus miscellaneous expenses will give us net reserves and surplus for balance sheet. Take up this. Here also multiple choice question possible. Preliminary expenses are shown under dash. A, share capital. B, resource and surplus. C, fixed asset. D, current asset. I mean the format தெரியலன்னு என்ன பண்ணிடுவோம்? Preliminary expense அது எப்படி liability ல வரும்? It will be taken to which side? Asset side. Long term benefit அதனால fixed asset னு காட்டும் இல்லையா? So it should be reduced from which one? Reserves and surplus. It should be reduced from reserves and surplus. See, many of those who completed BCom and joined intermediate, many of you would have done company order balance sheet in the same format. But we are learning in depth, more to close towards what? Practical side of reporting. So shareholders funds la rendu item patachu. What is the first one? Share capital. Second one is which one? Reserves and surplus. Knowledge of this will be helpful in your financial management subject also. You will work out return on shareholders funds, like net profit divided by shareholders funds into 100. That time you require the knowledge of shareholders funds also. So this will affect your learning for which one? Auditing, as well as which one? Financial management ratio analysis. In accounting, we are going to do some chapter like cash flow statement. There also we require the knowledge. So from all the reserves and surplus given in a question, add up minus what? Miscellaneous expenditures or fictitious assets which are not having any realizable value. Eliminate them. It will give us net reserves and surplus for balance sheet. What is the third one in the balance sheet? Shareholders funds like A share capital pathom, B in a pathom. Reserves and surplus. What is the next one? Money received against share warrants. Now you have to understand the difference between share warrant and a share certificate. Have you taken up reserves and surplus or reserves and surplus? Pay attention. If you are a share certificate holder, your name will be there as a member of a company. In the company's list of members, your name will be there. Your complete address and other details will be there. Okay, we call it as KYC or KYS, know your shareholder. Complete document will be available. What document? Name, your permanent account number, PAN, Aadhaar card will be been attached. Then, your demat account holder name, your address, your mail ID, your phone number, everything will be there with the company. If you are a share certificate holder, if you are transferring shares to another person, what will happen? It will be eliminated from your name. Another person will get added for that shares. For example, I hold 100 shares of a company. I am there as a shareholder. If I transfer the shares to another person in a home, I will be removed from that particular membership list. Another person will be added in the membership list. This is called as which one? Share certificate. Share warrant is a bearer document. What do you mean by bearer document? If you hold the share, you are the owner. That's all. If you hold the certificate, you are the owner. Okay, name will not be there and that will not be registered with what? Company. Which means it is like holding a currency note. I'm having 500 rupees in my pocket. Whether my name is written in that? No. Whether I have to inform my RBI to transfer the 500 rupees to another person? No. So that is freely transferable. That is freely what? Transferable. That is called as which one? Share warrant. If company has received any money through share warrant, that will be coming as point number 3. Company has issued any share warrant and collected the money, that will come under which one? Point number 3. Share certificate pani issue panna, that will be coming under which one? Share capital. That will be coming under which one? Share capital. Sir, what about dividend for them? Shareholders, for those who are holding share certificate, complete detail will be available with the company. When dividend is paid, it will come to your bank account directly. Your name, your address, your bank account details, all are available with whom? The company. When dividend is paid by the company, what will happen? Automatically, it will be credited to the bank account. What about the people who are holding share warrant? Whether company will know who's holding the share warrant? No, it is a bearer document. It's like Whether RBI will know who's holding this 500 rupees note? No. So simple. When dividend is paid to them, the company will announce the dividend. Company will announce the dividend. You have to get the dividend. Showing the share warrant, you have to go and what? Get the dividend. You have to claim the dividend. Online la claim pannalam. Otherwise, if it is going to be physical checks given, na, go to the company, give the share warrant and claim the dividend. Simple. Share certificate holders are called as shareholders of the company. They are called as members of the company. They have the right to vote, attend meeting and all. Who cannot attend meeting? Share warrant holders cannot attend meeting. Share warrant holders cannot attend meeting because the company itself will not know who's holding the share warrant. Okay. And dividend will be automatically transferred to whom? Share certificate holders. Share warrant holders have to go to the company and claim the dividend. Online link will be given. Put your share warrant name, enter your detail, then dividend will come to your account, or go to the company manually. If it is not electronic form held, okay, manually you have to go and claim the dividend, get the check on the mark. Clear? So if a company has issued any share warrant, that will come here. Practically this point number 3 is not there. Why? It is risky. Why it is risky? I can create a share warrant, fake share warrant in the form of Reliance. I can transfer and get money. Okay, whether it is verifiable, is it possible to go and verify and get it? Possible to verify, but practically it is impossible to verify every time when you transfer it. So risk is very high. Fake share warrants can be very, very high. That's why practically they are not there. For examination point of view, this will be always 0. This will be always 0. Simple. If company has given any share warrant and taken the money, that will come under which one? Point number 3. Money received against share warrant. Okay. Now what is over? Shareholders funds. What is over? Share capital, reserves and surplus, and what? Money received against share warrants over. No explanation required for this. It is automatically understood. What is point number 2? Application money pending what? Allotment. Title itself gives explanation. What is the title? Application money. We are closing or we are preparing balance sheet as on 31st March. We are preparing balance sheet as on 31st March. On 31st March, we collected applications. We collected application but not allotted shares. That is called as which one? Application money pending allotment. Can I show it as share capital? No. For example, you all applied for shares. Company has not allotted the shares. Can I show it as share capital? Only when shares are allotted, it will become which one? Share capital. Share allotment, that will be called as which one? Application money pending allotment. Can I show it as a liability? It is not a liability also. Is it a borrowed money? No, it is shareholders money pending allotment. That is why given a separate title. It is neither shareholders money nor which money? Borrowed money. So application money collect pannirukanga company, but shares are not allotted and that will be shown separately. For examination point of view, it will be 0. For examination point of view, it will be what? 0. Practical reporting side, if company has collected any applications but yet to allot, that will be shown in the balance sheet. No explanation need for that. What is the next one? Non-current liability. What do you mean by non-current liability? What will come under non-current liability? What will come under non-current liability? Simple. Obligations that will arise after 1 year. After 1 year. Or obligations that are payable after 1 year. Or you can say more than 1 year. Sir, I write something under non-current liability. When I have to pay for that? When I have to pay for that? Within a year or more than a year? More than a year. I write something as non-current liability. Within next 12 months, I will not pay. Anything that is payable beyond 1 year, we call it as which one? Non-current liability. Adale explanatory note parunga. What is explanatory note? Non-current liability. What is the first item? Right. Long-term borrowings. Start. Long-term borrowings. Start. Along with me, you can start. Long-term borrowings. What are the long-term borrowings possible for a company? What are the company? What are the things possible? Bank loans. Bank loans can be secured loan or unsecured loan. Okay. It can be other loans. Then debentures. Debentures are nothing but loans split into some face value and given to the public. For example, we run a company. When we take a loan from an individual or a bank, we call it as what? Loan. Loan is 100 crores. Loan is how much? 100 crore. We split into 1 crore documents of 100 rupees each. 1 crore documents of 100 rupees each. Issue to the public and collect money. Na? That is called as which one? Debentures. Debentures, or it can be bonds. Or some companies are allowed to take this. Certificate of deposits. But you have to get the permission from RBI, ROC, and if you are a listed company from SEBI to accept which one? Deposits. There is a procedure to get. There are a lot of legal formalities. Companies can accept deposits also. All these things will come under which one? Long-term borrowing. Clear? So secured or unsecured, debentures, bonds, certificate of deposits, all these things will come under long-term borrowings. What is the next one? Deferred tax liabilities. Let me not explain now. We have got a separate accounting standard for it. While learning accounting standard, we'll understand when to create a deferred tax liability, when to create a deferred tax asset. As of now, deferred tax liability means some tax differences that will be reconciled in future. Some reconciled in future. So how to create a deferred tax liability, we will learn separately for 3 to 4 hours. Okay. So that we will learn it separate. Let me not explain now. What is the next one? Long-term provisions. Now, listen, there are 3 words we use. One is a liability. Next one is a provision. Next one is called as contingent liability. What is the difference? What do you mean by liability? What do you mean by provision? Example cake meaning. What do you mean by contingent liability?
Liabilities or obligations that are payable and the amount is also certain.
Okay. 2 things. One is amount and obligation. Okay. Maybe I'll read obligation. Then amount irka the money. Clear? Obligation and which one? Amount. If obligation is certain and amount is also which one? Certain, that is called as which one? Liability. I borrowed from her 1 crore. What is the liability? 1 crore. Whether I should pay? Yes. Obligation is yes. Amount is also 1 crore. That is called as liability. What is provision?
The obligation is certain, but the amount is uncertain.
It is an estimate. Not uncertain. It is called as what? Estimate. For example, one employee joined today the company. She will retire after 25 years. She will retire after 25 years. At the time of retirement, we have to pay gratuity. We have to pay which one? Gratuity, leave encashment, retirement benefits we have to pay. Is it possible to tell exactly how much you have to pay today? After 25 years, how much she will get? Is it possible to tell it today? No. Is it possible to tell this is the amount we have to pay? No. So that is called as which one? Estimate. We estimate provision for gratuity. We estimate which one? Provision for retirement benefits. So that is what? If obligation is certain, yes, we have to pay gratuity, but amount is an estimate. What is a contingent liability? Obligation or amount, either one or both may be a question mark. What do you mean by question mark? Whether you have to pay, may or may not. How much amount you have to pay depends on some external factors. For example, one customer has claimed in the court some compensation. One customer has claimed in the court some compensation or a defective product we supplied. Let us assume we are manufacturing chairs like this. We supplied the chair. Customer, while using the chair, okay, met with an accident. Okay, he met with injuries. He filed a case against the company telling that medical compensation over 10 lakhs, loss of employment 5 lakhs, chair bought, case, etc. and all. He claimed about 50 lakhs. How much he claimed? 50 lakhs. Whether we have to pay கஸ்டமர் கிளைம் பண்ணிருக்காங்க கன்சியூமர் ஃபோரம்ல with medical bills, loss of employment, and mental agony so much. The customer has claimed how much? 50 lakhs. Whether you have to pay, we do not know. The judge will, I mean, look at the case, facts of the case, and may say yes or no. Obligation is a question mark. What is the amount? Customer has claimed 55 lakhs. What the court may say? Court may say 20 lakhs, 25 lakhs, 30 lakhs, or entire 55 lakhs also. That is called as which one? Contingent liability. Contingent liability, obligation or amount or both may be what? Question mark. Question mark means may or may not. May or which one? May not. Okay. For example, if court orders, we have to pay. Whether the court will order, we do not know. How much the court will order, we do not know. So when it is may or may not situation, that is called as which one? A contingent liability. Now we are discussing about which one? Long-term provisions. Long-term provisions means provision for retirement benefits. Then provision for long-term guarantee, warranty given. For example, we supplied a fan with 5 years warranty. We supplied a fan with 5 years warranty. Are you sure that within 5 years nothing will come for repairs? Are you sure that within 5 years nothing will come for repair? Some repairs will come. When repairs come, you have to repair and give it. So there's a liability, you create a provision. So long-term provisions, these obligations will come for more than 1 year. More than 1 year can create a provision that is called as which one? Long-term provision. Pay attention. Long-term borrowing will come under which head? Liability. Long-term borrowing will come under liability. Deferred tax liability will come under liability. This provision for gratuity, provision for guarantee warranty given will come under which one? Provision. Sir, what about contingent liability? What about contingent liability? They are not shown in balance sheet. Contingent liabilities are not shown in balance sheet. Shown in balance sheet. They are shown as notes to accounts. They are shown as which one? Notes to accounts. Now footnote accorded. We'll show us which one? Footnote accorded. Clear? We'll deal with this. AS 29 la paaka porom. We are going to discuss in which one? Accounting standard 29. How to deal with contingent liability. When it is called as contingent liability, how to deal with contingent liability, how to show as notes to accounts, we are going to learn separately about it. So wait, pardon, the non-current liability, what is the first one? Long-term borrowing. What is the next one? Deferred tax liabilities. Deferred tax liabilities, approve. Long-term provisions. What is the next one under that? Other non-current liability. Other non-current liability. What is it? What do you mean by other non-current liability? What will come under other non-current liability? Example. So debenture will come under long-term borrowing. If there is any timing adjustment for tax, that will come in what? Deferred tax liability. If we create provisions for obligations for more than 1 year, if we create for provisions for obligations that are arising more than 1 year, that will come under which one? Long-term provisions. And what will come under the other non-current liability? Pay attention. I borrowed money from you 1 crore. Where it will appear? Long-term borrowing. Clear? Okay. I create a provision for retirement benefit that will come under long-term provisions. Listen. I purchased an asset on hire purchase. I purchased an asset on hire purchase. Out of 10 crore, already I paid 2 crore. Already I paid how much? 2 crore. What is the balance? 8 crores yet to be repaid. This 8 crore I will pay it in next 5 years. This 8 crores I will pay it in next 5 years. Where will you show this? Is it a long-term borrowing? It's not a borrowed money. It is hire purchase, lease. Okay. Is it a deferred tax liability? No. Is it a long-term provision? No. It will come under which one? Other non-current liability. Simple. Long-term hire purchase and leasing obligations. Long-term hire purchase and which one? Leasing obligations. Take up this. So non-current liabilities include all these things. How many headings under the non-current liability? Long-term borrowing, deferred tax liability, long-term provisions, and what? Other non-current liabilities. Other current long-term liabilities include, obligations for long-term hire purchase and leasing. Any deferred long-term compensations payable. For example, a CEO of the company wants to go out of the company. Okay, he wants some compensation to go out of the company. We agreed, we'll pay 2 crores now. Next 4 years, you will get 1 crore, 1 crore, 1 crore like that. Next 4 years, whatever you are going to pay, that will be coming under which one? Deferred long-term compensation, other non-current liability account. And please note this also, difference between liability, provision, and which one? Contingent liability. Contingent liability obligation that may or may not arise. They are not shown in balance sheet. They are shown as which one? Notes to accounts. They are shown as notes to accounts. Opposite to non-current liability, we've got current liabilities. Obligations that are payable within what? 1 year. Within next 1 year, pay panona, that is called as which one? Current liability. Sir, balance sheet I show the amount. That amount will be paid within what? Next 12 months. Now that is called as what? Current liability. Current liability, what are the headings? Short-term borrowings. Short-term borrowings includes bank overdraft. Can you take overdraft for 5 years, 6 years? No, bank OD. Then short-term loans taken for less than 1 year. Cash credits. Cash credit, not loan taken in cash. Or OD taken in cash. Cash credits. So those things will come under what? Short-term borrowings. What is the next one? Trade payables. You can take it along with me. No need to wait. Please take it along with me. Old version, we'll call them as which one? Creditors. That is suppliers. And bills payable. Acceptances payable. They are called as trade payables. What is the next one? Look at this, short-term provisions. Provisions created for short-term obligations. Example, provision for tax, provision for bonus, dividends. Clear? Any provision created for tax, provision for bonus, and which one? Dividends. That will come under the short-term provisions. What is the next one given, Paranga? Other current liability. Any other short-term amounts payable. Example, 2 items. Calls in arrears will be reduced from share capital. Calls in arrears will be reduced from share capital. It will be reduced from share capital. Then, simple, outstanding expenses. Outstanding expenses like rent or salary or any expenses payable. Any expenses payable. Outstanding expense or then incomes received in advance. Any income received in advance. That will be coming under which one? Other current liabilities. Name any expense payable. It can be tax payable, rent payable, salary payable, expense but not paid. That will come as which one? Other current liability. Any income taken in advance. That will come as which one? Other current liabilities. Now coming to asset side, what is the first one? Non-current assets. Non-current asset, what is the first one? Plant, property and equipment. Which one? Tangible assets. Example of tangible assets? Plant and machinery, land and building, furniture. Loose tools also. Loose tools are nothing but machine orders, spares, parts, hammer, all those things. Hammer, the spanners, and the wrenches which are used for moving and the money. Machine order spares, they are called as which one? Loose tools. Freehold property. Freehold property no owned property no artham. Leasehold property no assets held under lease. All tangible assets will come. Land and machinery, land and building, furniture, tools, freehold property, and which one? Leasehold property, everything will come under which assets? Tangible assets. B, what is it? Intangible assets. Example of intangible assets? Goodwill, patent, copyright, trademark registrations, trademark costs. Then any other thing. For example, modern days we use the word recipe right. In case of food items, we call it as which one? Recipe right. So those things will come under which one? Intangible asset. Technical know-how, we call it as technical know-how. Technical know-how means that technology developed by you. That is also an intangible asset. What is the next one? Capital WIP. Capital work in progress means fixed assets under construction. It can be anything. It can be a building or plant under construction. That is yet to complete. The work is not complete now. That will be called as which one? Capital work in progress. That will be called as capital work in progress. What is the next one? Intangible assets under development. It can be anything. It can be again goodwill, patent right, or it can be like patent right, copyright, trademark, etc. Okay. It to be certified. It to be certified. If it is certified now, that will come under intangible asset. If it is not certified now, that will be called as what? Intangible assets under development. We spent money in developing, but we are yet to get the certification now. That will be called as what? Intangible assets under development. We developed a technology. We applied for patent. We got the patent now. That will be coming under what? Intangible asset. We are yet to get the patent now. That will be called as what? Intangible assets under development. Intangible assets under development. So non-current asset la first category paathachu. What is the next one? Take it up along with me, no need to wait. Long-term investments. Who's holding the investment? The company is holding the investment. We are holding the investment. Where? Investment in another company shares, debentures, bonds, government securities, mutual funds. These are the investments held by a company. We have to give detailed information about it. Okay. Investment in subsidiary company, associate company, joint venture company. Complete details we have to give. We have got separate accounting standard for it. Accounting for associates, subsidiary, joint venture. We are going to discuss what separately. Copy பண்ணிட்டீங்களா? Up to long term investment have we copied? Okay. Learn. Okay. Financial statement like subsidiary company investment, associate company investment, joint venture investment, like that we will learn in 3 chapters. What is the next item? Long-term loans and which one? Advances. It is taken by the company or given by the company? Given by the company. யாருக்கு கொடுத்திருப்பாங்க? To whom it is given? You have to give details. Employees கொடுத்திருக்கீங்களா? Other companies கொடுத்திருக்கீங்களா? Is it given to vendors? Is it given to vendors? Okay. Is it secured or unsecured? Loan கொடுத்தது வந்து secured loan இல்ல என்னது? Unsecured loan. You have to give the details about it. Is it given to the related party? What do you mean related party? Is the loan given to related party? What do you mean by loan given to related party? Let's assume you are a director of a company. You are a director of a company. Your spouse, husband or wife, got loan from the company. You are a director of a company. Your spouse got loan from the company. That is called as which one? Loan given to a related party. Complete disclosure கொடுக்கணும். Why that loan is given? Is it secured or unsecured? Are you collecting interest as per the market rate? Is it given in the normal course of business or not? You have to give what? Complete details. Clear? So details about loans and advances. Given by the company to whom? To whom? Employees ka, other companies ka, will vendors கொடுத்திருக்கீங்களா? Secured loan, unsecured loan, all these details should be given. Is the loan given to related party? That detail should be given. What is the next one? Deferred tax assets. As I told you, we'll have a separate accounting standard. When to create deferred tax liability or asset, we'll discuss it later. What is the next one? Others. Other non-current asset. Other non-current asset will include like amalgamation adjustments. We learned this about amalgamation adjustments, how to create amalgamation adjustment, when that is created. While learning the chapter called amalgamation, we'll do this. Other non-current assets. Next பாருங்க current assets. Current assetsல என்னென்னலாம் வருது? Current investments, simple. Investments held for trading or for sale. We are going to sell the investment when there is an active market available, profit available. Our intention is not to hold what? Long term. What is the next one? Trade receivables. Old version, we call it as debtors account or which account? Customers account and bills receivable. Now it is called as trade receivables. What is the next one? Inventory is nothing but closing stock of raw material, work in progress, finished goods, consumables. Consumables na indirect material. Closing stock of raw material, work in progress, finished goods, and which one? Consumables are called as which one? Inventory. Sir, what do you mean by raw material? Input used in processing. Sir, what do you mean by work in progress? Goods manufactured or not manufactured? Not manufactured. Semi-finished goods. They are called as which one? Semi-finished goods. Finished goods na ready for sale. Consumable stores na indirect material that will be consumed in the production process. For example, in a garment factory, what do you mean by raw material? Cloth. Cloth will be called as which one? Raw material. What do you mean by work in progress? Semi-finished goods. It will be in cutting stage or fitting stage or stitching stage or ironing stage or packing stage. It is incomplete now. That is called as which one? Work in progress. 100% ready, which means all the work is over, including packing, labeling, all the work is ready. That is called as which one? Finished goods. Consumables. Garment factory you can find the grease, oil, maybe white petrol to clean certain dirts and all. Diesel consumed by generators. They are called as which one? The needle used for stitching, the cleaning equipment material, cleaning material and all are called as which one? Consumables. All these are called as which one? Inventory. All these are called as which one? Inventory. What is the next one? What is the next one? Cash and cash equivalents. Most important to understand. Please listen to it. Then you can copy. This includes cash in hand. Cash in hand. This also includes checks in hand. We are ready to get the money. Checks in hand or drafts in hand. It also includes bank balances. It also includes bank balances. It also includes checks, drafts, deposited. Checks and drafts deposited in bank, but not collected. It is equal to cash. 29th March we deposited. It will be collected on 2nd April. As on 31st March, it is yet to be collected. It will be called as which one? Cash equivalent. It will also include short-term investments, short-term investment or marketable securities. With less than 3 months maturity. Short-term marketable securities with 3 months or less maturity. Now that is also called as which one? Cash equivalent. Now I deposit today, I'll withdraw within 3 months. Now that will be called as what? Cash equivalent. So why it is called as cash equivalent? For example, you all paid the fees. That money has gone to which account? Current account. Keeping money in current account will give returns or no returns? No interest will be paid by the bank. So what will you do? We'll keep in short-term deposits. We'll keep it in which one? Short-term deposits. Whenever we want cash, we can withdraw and use it. Or we'll keep it with 3 months, 2 months, 3 months, 4 months maturity. They are called as which one? Cash equivalents. Because whenever you want, you can liquidate it. Liquidate it means what? Get it and use it. Get it and use it. That is also covered in which one? Cash equivalent. Here a question can be tested based on this cash and cash equivalent. What is included? What is excluded? K-Club. What is the next one? Short-term loans and advances given. Like salary advances given, then advance tax paid, all those things can come. What is the next one? Other current assets. ரொம்ப simple. Prepaid expenses. Prepaid expenses. That is paid in advance. Paid in advance and which one? Accrued incomes. Accrued income means incomes receivable. Incomes receivable. See, for the past 1.5 hour or whatever, we are seeing details about which one? Balance sheet. How to prepare a balance sheet. Please remember, whatever I explained it to you, it is an explanatory note. In the balance sheet, you cannot alter the words. Can I use the word cash balance, bank balance, and balance sheet? It will be called as what? Cash and cash equivalent. Can I use the word closing stock in balance sheet? No, you should call it as which one? Inventory. Can I use the word trade receivable? Sorry, debtors, bills receivable? No, it must be called as what? Trade receivables. And the notes to accounts can be given for all the contingent liabilities. If you want to give any explanation, you can give what? Notes to accounts. You want to inform the shareholders about certain assets or certain liabilities, secured or unsecured, you can give it in the form of which one? Notes to accounts. See, if you look at in class, we spent about 2 hours time. But if you look at, I pass and record the class. I pass and record the class. If at all, if you're accessing recording, it will take about 1 to 1.5 hour time. Because when you write, I just pass and record on the madri. So recording, some students, when they are not coming to class for some reasons or some health reasons and other things, when they access the recording in the previous batches, they used to tell me, sir, recording 1 hour தான் கொடுத்திருக்கீங்க, but complete பண்ணதுக்கு 2 hours ஆகுதுன்னு சொல்லி. It will happen so because I pass and record. I pass and record. So you have to pass and copy wherever it is required. If at all, if you're accessing which one? Recorded classes. Of course, it will take about 30 minutes extra time to complete. Recording 1 hour, it will take about 1.5 hour, 2 hours for you to complete it. So that is number 2. Pay attention. Just a recollection. Liability, what is the major heading? Shareholders funds, application money, pending allotment, non-current, and which one? Current liabilities. Okay, assets, non-current assets and which one? Current assets. We had seen detailed explanation for all these things.